We wonder if it will help settle some of the volatility is when we get more clarity about regulation. I know regulators are increasingly trying to figure it out, but folks that Tim and I have talked to, and certainly when we were down in Dallas, Texas at the Pershing Insight event, people who are well entrenched in the crypto world are welcoming regulation. They think that will be very helpful in moving this industry forward.
That's a great point. I think that's very true. As there's more regulatory clarity, I think some of the bad actors will get washed out of the system, and the good actors will will feel safer in terms of how they operate, and consumers definitely will feel safer as well.
Olga, just in the last minute that we have with you, help us understand what you're watching as we push this story forward and understand if we are in the depths of a crypto winter, when we do emerge and this frost starts to melt away and it becomes spring. What's the catalyst for that?
You know, a lot of this is kind of actually at this point driven by general economic conditions as well as factors related to crypto specifically. But some of the things that I'm watching is kind of the domino effect, which other crypto companies might be affected, which ones might fold, and what's going to happen. I think we need to see the fallout end so that the crypto winter could sort of
to be continued. No doubt about it. Olga Karif is our crypto reporter at Bloomberg News, Tim.
Bloomberg Business Week is brought to you by Informatica. In the cloud, your data has the power to do the extraordinary. Manage data across any location in the cloud for accurate and actionable insights. More at Informatica.com.
I can't wait to see how this all falls out, but it just feels like so many pieces still need to be figured out. It's still so new. No doubt about it. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, Tim. So we talk about women in the C-suite. There are not many. I don't even know if there's any. No, there's a few CEOs right now of S&P 500 companies. There's also a small number of female CEOs to lead financial services company, and we're going to hear from one. That's coming up next.
Yeah, we're going to hear from Scarlett Fu's recent conversation there. I don't want to give too much away, so I'm not going to. First up, though, let's get a check of what's going on in markets, Charlie Pellet, because we got less than a half hour to go.
Indeed, I got red on the screen. 29 minutes to go ahead of that closing bell, Tim, with the S&P down 11 right now, drop of 0.3%. The Dow slumping 72, been lower for much of the trading session today, down 0.2%. NASDAQ down 84 right now, drop there of 0.7%. Do want to begin with a headline from the Bloomberg Professional Service. The G7 will tell ministers to explore price caps on Russian gas. Here in the U.S., natural gas is trading higher, net gas up 3.4%, 643 per million BTUs. Crude is advancing 1.9%. West Texas Intermediate crude at 109 right now a barrel on WTI. Spot gold is down $3.50 the ounce to 18.23, drop there of 0.2%, and the 10-year down 17.30 seconds, drop there of right now we've got the 10-year yielding 3.19%. 10-year is down 17.30 seconds. Stocks lower across the board with the S&P down 11, down 0.3%. The Dow is down 71, decline there of 0.2%, and NASDAQ is down 84, a drop of 0.7%. Well, as for the overall market backdrop, Lisa Hornby is head of U.S. multi-sector strategy at Schroeder Investment Management, and she was interviewed this morning on Bloomberg Surveillance.
The market is still gyrating between, is it a recession story or is it an inflation problem? Which one do we have? And as you see, I do think that the narrative will turn towards it's a growth problem. We're going to be heading into a U.S. recession. We're not quite there yet, which means bonds and equities, that those correlations can be a bit unstable.
Sam Bankman-Fried's FTX crypto exchange is said to be exploring whether it might be able to acquire Robinhood Markets. This, according to sources. Robinhood shares are up now by about 14%. And Tesla will face a new trial over damages it owes a former contractor who won a whopping $137 million jury award after he sued over racist abuse he was subjected to at the electric vehicle maker's Northern California factory. Recapping stocks lower, S&P down 12, down 0.3. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So Hafiza Gaye Erkan, she will be one of a small number of female CEOs to lead a financial services company. And she caught up with our own Scarlett Fu. And I got to say that Erkan's surprise departure, she's leaving First Republic Bank. It disrupted the lender's succession plans earlier this year. She will now become CEO of Greystone. That will happen in September. And in this excerpt of the interview that Scarlett did, Hafiza discusses leaving First Republic and then moving onto Greystone. Check it out.
It didn't seem as abrupt to me from my perspective. There was a lot of thinking. It was a difficult decision, and incredible thought went into it over time. And I'm incredibly proud of the successful track record, the leadership, the followership, the amazing trusted relationships that I've built at First Republic. Great 8 years leading the organization. It was time for a change and for a new challenge where I can be at a platform where I can utilize all my skill set in banking, in private equity, investments, and fund management. And meeting with Steve and getting to know Greystone, I'm very excited to be able to do that as the CEO of Greystone now.
Do you think you're limited in any way during your time at First Republic, given your broad experience in financial services?
We have achieved a ton over the 8 years along with the team. So I've had great leadership experience with our founder over there as well, and a lot of empowerment of amazing trusted advisors. At Greystone now, with real estate business and further expansion plans, there will be a lot more opportunities for growth.
Still, it is a tricky time to lead a finance company, especially one that's tied to real estate, given the overall environment. I know at Goldman Sachs and First Republic, you really focus a lot on risk management. So from where you sit right now, what is your single biggest risk to manage when you take on this role officially in September of 2022?
For institutions as well as for retail investors, it's really important to focus on cash flow, strong financial position. Liquidity is not the same as solvency, and we all know that from past history. And when we look at the real estate, yes, it is a cyclical business, and we're going through the environment right now with the macro drivers, but there are a lot of great tailwinds at the same time between supply constraints, the millennials being the first-time home buyers, the Gen Z right behind, extremely tight labor market still, and we're also seeing a much healthier household balance sheet. And when there's uncertain times and volatility in the markets like there is right now in the real estate market, a lot of the competitors actually go hot or cold. And this is a great time for a financial organization like Greystone with a strong financial position to stay warm in the market and to be able to serve our clients in good times and bad times, and that leads to grabbing market share. So it's actually uncertain times bring great opportunities, and real estate market is presenting one right now.
So you're looking to be opportunistic, which makes a lot of sense. Yet I think about rising interest rates and the impact it has. It reduces demand for loans, and JP Morgan, for instance, just announced that they're going to lay off hundreds of people in their mortgage unit. Greystone lends to property developers, and I know commercial real estate and residential real estate are two totally different animals. But what do you see as the impact of rising interest rates playing out in your space? I mean, could we see layoffs or reassignment of people?
Okay. Sorry about that, Paul.
Mortgage rates definitely ratcheting up with Fed funds
so
increasing and mortgage rates ratcheting up over the past few months. We have seen some cooling off and moderation in home price activity and the growth, deceleration in the growth of the home prices. And the last time we have seen this fast of a rise in mortgage rates and in Fed funds rates was in 1994 and around that time. And we have seen the new home purchase activity to come down. But again, it also leads itself to distressed real estate opportunities, and it also leads itself to being able to continue to serve your existing clients in times when they're uncertain. And having the liquidity, having the good funding position and strong funding position and cash flow position enables us at Greystone to be able to do that. And with the joint venture with Cushman & Wakefield, and with the trusted relationships that we have, the strong financial position, I think we're very, very well positioned to be able to grab market share at this point.
With this appointment, Gaia, you are the rare female CEO of a financial services company. I think of Jane Fraser at Citigroup. I think of Jenny Johnson at Franklin Templeton, Abigail Johnson at Fidelity. What do women chief executives in general, and you specifically, bring to the table that male leaders don't?
Great question. And in general, scaling the cultures of the organization and being able, especially working with founders and taking organizations that have great people-first cultures and scaling that really requires an understanding of the business, an understanding of the emotional side of the humans, because it's all about people where people really matters, and being able to commit yourself to be 24/7 with all the other constraints that you have in your life and being able to balance that.
All right, that was Bloomberg Scarlet Fu with Hafiza Gaia Erkan. You can check out more of that interview on the Bloomberg and at Bloomberg.com. All right, back to World and National News and Nancy Lyons. Hey, Nance.
Thanks, Carol. Another Supreme Court win for conservatives by a vote of 6-3. The Supreme Court has sided with a high school football coach who was suspended for praying on the field. Justice Neil Gorsuch, writing for the conservative majority, says the Bremerton, Washington School District misconstrued the First Amendment. Bloomberg Supreme Court reporter Greg Storrs says more conservative rulings are likely coming from the 6 conservative judges.
They're willing to overturn precedents. They read the Constitution through that originalist lens of looking at the words and what they meant at the time, and they're going to evaluate American tradition and history as they see it, to see what sorts of rights were protected at the time the Constitution or perhaps the 14th Amendment were enacted. And for the most part, that mode of analysis gives you very, very conservative results.
Bloomberg's Greg Storr. We're expecting more opinions from the Supreme Court this week on climate change and immigration, but the decision to overturn abortion rights continues to reverberate. Mohammed Yunus, editor-in-chief of Gallup, tells Bloomberg the ruling could further deepen America's political divide.
There's no doubt that America is politically more divided than since we started measuring it in the 1930s. There's been no sign during these past months of the Biden administration that that's improving in any way.
Gallup's Mohammed Yunus. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Massar, Tim Stanovic, live here at Bloomberg headquarters on Bloomberg Business Week. So, Tim, it feels like, first of all, it might be time for you to start home buying again.
Oh, yeah, I'll take two of them. Maybe a six-pack of apartments.
But it feels like FOMO in the housing market is starting to go away a little bit.
Yeah, Jennifer Epstein, who's recently on the real estate beat, has been sending us some great stories and writing some great stories for the Bloomberg audience. Check them out on the terminal and at Bloomberg.com. This one about Manhattan's hot real estate market is starting to cool, so she's got the data here, okay? So sales boomed from late 2020 through early 2022. Potential buyers, they did not want to miss out on the chance, Carol, to get in before prices rose further. But now some buyers are putting their hunt on hold, according to interviews with agents and other real estate experts. Other consumers who are continuing to look are starting to become pickier about price. That's a marked shift from last year.
You know, it's interesting, right? How many times do we often hear people talk about real estate often goes hand in hand with what's going on in the financial markets. Last week was a good week, right? So maybe might be a lag and we might see some optimism in a week or so. But, you know, I thought one of the stats that jumped out for me is that we've seen a near doubling of rates on a 30-year fixed mortgage since the start of the year. I mean, that's real money when you think about your monthly payments.
It is real money. And a lot of times we'll talk to realtors who serve a section of the income spectrum where they're not taking out mortgages, right? They're buying in cash. But for most people around the country, they are taking out loans to buy. So here's that data I was referring to, Carol. The number of Manhattan contracts signed has declined year over year every week since April 11th. That's according to Urban Digs, a real estate analytics firm. During the week of June 13th, so just a few weeks ago, for instance, there were 237 contracts signed. That's down 28%, Carol, from the 331 signed during the same period last year. But it is still above the pre-pandemic levels in 2019. That's important.
So I love this Urban Digs co-founder, John Walkup, saying, all right, essentially the market's going back to normal. From late 2020 through early 2022, it was like driving at 120 miles per hour. Now we're back at 60 miles per hour. This is something you and I talk about with everything in our world, like pre-pandemic levels, going back to normal. That's what this kind of the world and the financial markets and the economy is trying to figure out. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story with an Amtrak train carrying 243 people derailing in Missouri. Amtrak says early reports are of injuries following that derailment. Stocks are lower after the second biggest weekly rally of the year, with money managers rebalancing their portfolios in the final days of the quarter. Right now, the S&P is down 9, a drop of 0.2%. Dow Industrials down 55, drop now of 0.2%. And NASDAQ is down 77, a decline of 0.7%. The 10-year down 16.30 seconds, 10-year yield 3.19%. Spot gold down 0.3%, 18.22 the ounce. West Texas Intermediate crude oil up 2.2%, 109.98 a barrel, and Bitcoin now is down 2.5%, 20,868 on Bitcoin. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
The Supreme Court decision striking down Roe v. Wade, the landmark ruling that for nearly half a century had guaranteed a right to abortion across the U.S., is the most significant setback for women's rights in generations. The move should serve as a rallying point for the majority of Americans who opposed overturning Roe, and for the nearly 90% of Americans who oppose total abortion bans. While an effort in the Senate to codify abortion protections into federal law failed last month, lawmakers should continue working to find common ground on a bill that would unite Congress's pro-choice majority. Meanwhile, pro-choice Americans should see this moment as a call to action and recommit themselves to the legal and political battle to secure fundamental rights nationwide. Future generations are counting on them. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 10, 11 minutes left in today's trading session, the first trading session of the week. But we're going to get ready to wrap up the month of June. That means we're getting ready to wrap up a quarter. And hard to believe, Tim, but the first half of the year.
Already?
Where did June go?
All right, I'm a glasses half full type of person, so,
Yay.
Looking forward to the next 6 months. How's that? Aaron Kennan is co-founder and CEO of Clear Harbor Asset Management. They've got over $1 billion in assets under management at Clear Harbor. He joins us once again on the phone from Stamford, Connecticut. Aaron, how are you?
Doing just fine. Thanks for having me back.
Okay, so help us make sense of this. Is the worst behind us?
Well, I don't think we can make that call as of yet. We believe that with the Fed tightening as aggressively as they are, history would suggest that markets do not bottom until the Fed is done tightening and actually starts cutting rates. And if you look at Fed funds futures, Tim and Carol, that probably doesn't happen until the first quarter of next year. And so, right now we're still wading through a great deal of volatility. When you're in the midst of heightened volatility, if you're a hedge fund, you're taking down your gross exposures, your net long positions, so that's not great for the market. If you're a retail investor, you're dealing with the volatility by either putting a little bit of cash on the sidelines or, unfortunately, you may be buying at tops and selling at bottoms. So, we think that this is a period where it really warrants a great deal of caution.
So caution, it's a case of, is it fair to say, Aaron, as you said, it's all about the Fed at this point. That's what's going to determine, in terms of valuations and how we look at the outlook at this point, and whether or not the Fed takes us into a recession. That's going to be what guides financial markets, certainly the equity market trade at this point. And until we get beyond that, we're not going to really care about earnings fundamentals and growth.
That's right. And if you look at where you talk about the first half of the year, the 60-40 portfolio hasn't worked. Bonds are down 11%, equities are down 18 to 20%. At least during the Great Recession, you had bonds up 7% as equities trended lower by 55-odd%. So you had a little bit of protection there. And of course, the elephant in the room on why that is this year is inflation, Carol. So we are seeing some light at the end of the tunnel, and I know it may not be in vogue to suggest this, but inflation metrics such as, for example, copper down 24%, nickel off 50%. I was looking at shipping rates. They're down dramatically over the last couple of months. Aluminum's off 35%, iron ore, wheat, even oil's off double digits right now. So there is some light at the end of the tunnel here, and I think to the extent that the Fed's aggressive actions are tightening market conditions, slowing growth, reducing these inflationary pressures across soft commodities, the metal space, and even things like lumber. You mentioned housing under previous session. We think that there will be some normalization going on. That will be part of the bottoming process, but we're not there yet. The Fed is still certainly trying to pull down inflation before they can, bring their proverbial Fed put closer to in the money. It's way out of the money right now.
But Aaron, are those commodity declines that you just mentioned, including oil, are those declines due to concerns about the health of the global economy and recessionary fears?
Yes, they are, and I think that's precisely what the Fed, even though they may not want to state it explicitly, it's the goal of the Fed and most central banks, which is they need to pull down the aggregate demand part of the curve. And in order to do that, they'll ultimately be pulling down some of the larger inputs to inflation, Tim. So, this is why the Fed last week came out and said we may not be able to avoid a recession. They haven't been able to predict recessions all that well. In my lifetime, there have been about 6 or 7, and they didn't predict one of them. So I don't think we want to think about their dot plot on recession predictions, but we can think about how their policies are going to impact markets across fixed income and equities, and that's what we're trying to do.
So what do we start doing, Aaron? Do we start positioning for 8 months from now? Is that how we think about it? Or do we need to, as you said, the 60-40 isn't working again. So as investors, how do we combat this type of environment?
Right. I think it varies. We manage money for individuals, families, and foundations. So those types of categories have different, long-term and short-term objectives. For a family, it may be liquidity and ensuring that you have proper liquidity during this period of uncertainty. But right now, you've also seen significant valuation compression in, let's say, the mid-cap growth segment of the market. So if you're underweight mid-cap growth, this may be a time to at least move back towards your target. I'm certainly not suggesting, being extraordinarily tactical here. I think that would probably be a mistake. The defensives still look like the place to be, but at some point, when we do see growth decelerate and inflation decelerate, we think that the long-term plan on the equity side will be to look for sectors, subsectors, and companies that can take advantage of a slower, longer-term growth picture, which we believe is the picture for the next decade. It's not negative, but it's a lower trend growth, and we think growth companies will benefit over value-oriented companies in that environment. But we're not there yet.
Okay, when do we get there, though, and what are the signs that we get there?
So, Aaron,
I think
what does that crystal ball show you?
Yeah, please, come on. Carol, that's how I roll here. I ask everybody because you got to have conviction.
That's true.
Yeah, absolutely. I think valuations need to correct probably more from here. We're still at about the 25-year average level for forward PEs, so that hasn't really been, sort of a panic indicator as of yet. An energy collapse would be nice, but we have this very unfortunate, tragic, idiosyncratic variable, which is the Russian invasion of Ukraine. And, of course, the Fed, historically, as the Fed has tightened, markets have never bottomed until the Fed has actually stopped tightening and then made their first rate cut. So I think that's an important signal to look for in the future.
Where don't you want to be right now, Aaron? No doubt about it.
Well, I think you don't want to be over your skis in terms of your types of risks that you're taking across major asset classes. So if your foundation and your equity target is 50% and you're at 65, you may want to be careful. But just conversely, if you're at 30 and we've already corrected 20%, you may want to be thinking about rebalancing on the margin. So I don't think making major tactical bets at this moment relative to your long-term game plan is a great strategy.
All right. Aaron Kennan. Really good to have you join us. Aaron is the co-founder and CEO of Clear Harbor Asset Management. Aaron's got over $1 billion in assets under management. Those folks over at Clear Harbor Asset Management. Joining us on the phone this afternoon, Carol from Stamford, Connecticut.
I love that he went through things like copper, nickel, shipping rates, oil. These are some of the stories, too, we put out on the Bloomberg. If you're looking for signs that inflation is easing, it's not something that's going to go down fast, potentially. It's going to take time. We've heard this from the Fed, but we are seeing certainly some of these numbers come down, and that will certainly start to bear out in some of the inflation numbers that we get over the next few months. But we'll see whether it's fast enough and happens before the Fed turns us into a recession.
Gas still expensive, Carol, but under $5 a gallon nationally.
I know, right? And that's a big change. All right, we're going to head over to our Bloomberg TV team for Beyond the Bell on radio, TV, and YouTube.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Taylor Riggs, I remembered at this time. Katie Greifeld in for Caroline Hyde. We're counting you down to the closing bell. Here to help take us beyond the bell. We welcome our global simulcast with Carol Massar and Tim Stenovic, and we welcome our audiences across Bloomberg television, radio, as well as on YouTube. Carol, to parse the crucial moments of the day. A day I don't know if we can extrapolate too much long-term out of what's happening today, but certainly a down day to be sure.
Yeah, very different from the tone last week. And I just want to tell you, Taylor, that sometimes I forget my husband's name, but I never forget the dog's name. I'm just going to put that out there.
I hear Romaine only hurts the ones he loves, so I'm hanging in there.
I will say, and Romaine pointed this out, home builders were something that I've been watching too. I mean, if you're looking for where there's been some gains today, certainly the home builders, it's up about 0.5%, but have been on quite a tear, 10, 11% higher since about mid-June, Tim.
Yeah, but if we take a step back and look at the S&P 500 as far as today's trade, down about 0.4%, really searching for direction for most of the day. It did move between gains and losses more than a dozen times, but then after about 1:20 Wall Street time, it was firmly lower, and we seem to be, kind of hanging around, not quite the lows, bouncing off the lows from earlier in the session.
Yeah, some decent 1% losses on NASDAQ 100. Earlier, the Russell 2000, the stocks, and the transportation index, Katie, were all in the green. But now, of course, Russell 2000, only the major one, really here to hang in there. And I think one thing that you've really been noting is the impact of higher yields. And I wonder if we're going to start to have some of those conversations again about valuations with yields rising. This sort of a classic day when equities are lower.
And whether those lower valuations open up bargains when it comes to M&A. Maybe that's what we're seeing today with Robinhood and FTX, potentially.
Yeah, I mean, I was taking a look a little bit earlier, of course, at that big drop in market cap valuation for Robinhood, a $59, $60 billion valuation a year ago. Now, even with today's gains, still only about $8 billion. Well, not gaining today. The Dow Jones Industrial Average going to finish the day lower by about 0.2% as we wait for these numbers to settle. The S&P 500 camped out right now at 3,900. That puts it down by about 0.3%. And the NASDAQ Composite right around 11,502, down 0.9%. All of these numbers are pretty much right around the lows of the day. And the Russell 2000 kind of bucking the trend. It is going to finish the day higher, only by about 6 points at about 17,771 and change. That's higher by about 0.3%. But like the other indices, that's also the low, right around the low of the day.
Yeah, I'm going to call it a teenager trading day because it feels like a lot of angst in terms of how we traded today. Right, it felt uncomfortable. And even so, the S&P 500, 235 names, Katie, were higher, 265 lower, 3 unchanged. So you still had some gaining in today's session, even though it felt not so great.
Teenager trading day. I was definitely angsty and uncomfortable as a teenager.
Weren't we all?
But in any case,
No.
It was a pretty rough day for the market to that point. You did have some winners. You had the energy sector up 2.7%. That was your biggest gainer. Utilities saw some love as well. But
Connection
beyond
lost.
there, I mean, healthcare, a little bit of a bid, but it was a lot of red when it comes to the sector level. If we look at some of the biggest losers, retailing, consumer durables, all seeing some losses there, approaching 2% when it came to retailing. But Carol, really, it was a down day overall in the market.
All right, but I did find some really cool gainers. I thought about Romaine big time in this because it was a little not household names that really came up on my radar. AFIB is the ticker, Acutus Medical. This is a company, it's a nano cap market cap, $29 million, medical equipment company for patients with heart arrhythmia. And their company's AcuCross system got FDA clearance and commercial launch. So that stock was up 88% at the close, up as much as 125% at its highs. Let's get to another one, not a household name. It's called Portland General. POR is the ticker. Electric utility, this market cap a little bit bigger, $4.4 billion. It was up as it was announced that this company will replace Digital Turbine in the S&P Midcap 400. So this stock was up about 5%. And then here's a household name, Qualcomm. This stock was up about 1.7%. We saw the semiconductor names moving in today's trade. This was among the top of the NASDAQ 100. You saw a pop in those chip makers after a Supreme Court ruling. It was Apple versus Qualcomm in this case. Apple rejected by the Supreme Court in that Qualcomm patent challenge. So that lifted the whole sector, and Qualcomm among them, Tim.
Carol, you had to dig deep for some of those gainers today.
I did.
The micro caps. All right, go in there. Let's talk about some of the decliners. We check in with the airlines again. We got Spirit Airlines ticker SAVE finishing the day down by 8%. The latest in the battle for Spirit Airlines sending shares of the ultra low cost carrier lower today. Frontier late on Friday increased its cash option for the offer. Along with stock, it values the airline at about $2.6 billion. Remember last week, JetBlue said it would be willing to pay $3.7 billion for Spirit. But then you got the shareholder advisory firm, ISS, coming out today saying that the Frontier offer is, quote, far superior to what JetBlue offers, even though it's, $1 billion less.
Yeah, I thought the market reaction here was interesting because not only did you see the big drop in Spirit, but I think Frontier was also down like 11%. And I think they have the big vote apparently supposed to come up on Thursday. It's hard to understand why they would think the JetBlue offer would be superior strictly from a financial perspective. But
maybe it's because of from a regulatory perspective. So there's more of a chance of this deal getting through with these combined two ultra low cost carriers, because this is a highly regulated industry, and they got to get it past the regulators in order for this to get approved. Does it mean lower ticket prices? That's what the CEOs say. So we'll see.
No.
They need to come down, right?
Really come on.
All right, just testing you guys out there.
The COVID or post-COVID speaking. Anyway.
Yeah, if oil prices come down, maybe that would be the case.
Do we get to move on to yields yet? Or are you still on decliner?
Yeah, coin. Well, I do want to hit on coin. Shares closing the day down lower by 11%.
We got all day.
Yeah, 78% year to date. A couple pieces of news. There was a downgrade over at Goldman Sachs, but then of course we had the FTX news from our own Annie Massa and company coming out today, essentially saying that FTX, of course, is interested in Robinhood, a competitor to Coinbase.
Do I get to go now?
Go, Taylor.
My turn.
Just take the baton.
Double header. 2s and 5s. 2s at 11:30, 5s at 1 p.m. Weak and then weaker coming in after that. And sort of leads me to believe that if you're getting sort of some of these big tails on these auction and yields are rising, was that not enough to entice demand coming into this market? Is there expectations, Katie, that yields are still going to climb higher from here? Not a whole lot of news here, but we're going to get some decent Fed speak this week. And I'm not sure the narrative will change, except that looking at hopefully some anchoring again of some of these inflationary expectations. But nonetheless, you're getting some decent yields up here really across the curve.
And it is interesting to stick on the auctions a little bit more. I mean, now that the Fed has left the building, you are starting to see more of those tails that had already been a theme so far this year. It's the same thing that you're seeing in the corporate credit market, that basically these issuers are having to offer bigger concessions to get people to buy the debt. I don't know, Romaine, I'm fascinated.
I am fascinated, but I'm also fascinated by some of the resiliency there. I mean, look, I think you can point to a lot of economic indicators that would suggest that we are headed for an economic downturn, but you're not really seeing that necessarily reflected in some of those credit spreads just yet. Even the ones that have widened aren't widening to the levels that we would normally see in a recessionary environment.
That's a good sign. And we just talked with Aaron Kennan, and he was just talking about, too, that some of the easing in some of the inflationary pressures that we're seeing out there, whether it's shipping rates and, go through the metals market. We've certainly seen commodities overall, even oil, come down. So whether that will help the Fed, Tim, ultimately get to what it needs to do and maybe, stave off a recession, fingers crossed there.
He's not ready yet to call a bottom, though.
No, he is not.
He said multiple times, a reminder that you don't typically see a stock market bottom until the Fed stops raising rates and indeed starts lowering them again. So he says, bear market rally perhaps, but not yet ready to call a bottom. He says valuations have got to come down.
Yeah, and we're going to get Nike earnings after the bell a little bit later today, and I'm actually really interested in this one because it's been really resilient, and we talk about its surprise to the upside for something like the past 7 or 8 quarters, and you kind of wonder that if a company like that has done so well at managing its supply chain, done so well with connecting consumers, can't sort of hold its own in this environment, then what hope is there for some of the other retailers?
Fed speak never ends, earnings season never ends. The Nike earnings will be very interesting. I'm excited too. 4:15, but I talked about this on Friday, but the Fed wants to see the consumer crack. The fact that consumers have been so resilient. Absolutely. How do you cool demand? What does cooling demand look like?
I did read a note that instead of a Fed put, there's a Fed call, that the Fed does not want these big sort of loosening of financial conditions because that makes consumers feel better, will start to spend, and they're trying to stop that to help the supply-demand inflation imbalances. First time I've read a note like that. It was interesting.
Well, is it stop it or is it simply to moderate, I guess, some of those
Moderate. Well,
I think
well
there,
said.
and I think
Well
there's
said.
a big difference.
Yeah, well, and we'll see it. We get a lot of economic data points, consumer sentiment, confidence. We're going to see what's going on with home sale prices. We've certainly seen them come down, or at least some concerns in terms of sales coming down because of those higher mortgage rates. So we'll see what it says about the strength of the consumer this week.
Is it too soon for us to start talking about next week's jobs numbers that come out during a holiday week?
Yes, we need to get through July 4th. Can we just do that?
I don't know why they're doing it during a holiday week. I'm not going to be here, and
They always do it, Tim.
I'm
But
bummed
it's
out.
July 1st. It's Friday.
No, it's the week
The
after.
data never stops.
Yeah.
This is important stuff.
All right, has everybody seen the Top Gun sequel?
And by the way,
I just
Tim,
want to
just so
know.
you know, July 1st isn't actually a holiday, so you could come into work that day.
All right, noted. Thank you. I'll be here. I think I will be here that day.
Okay.
I don't know.
Just pointing that out.
Yeah.
I mean, the 4th is on a Monday.
Yeah, I'll be here.
Okay.
Don't worry.
All right, are we done? And we all know it's Taylor. Okay, we got to run. All right, that's going to do it for. Wait, did you have something more?
No. Okay. Say goodbye.
All right, that'll do it for our cross-platform coverage. Radio, TV, YouTube, we do it all. It's called Beyond the Bell. We will see you again, same time, same place, tomorrow.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. Carol Masser, along with Tim Stenovic. Are you confused about
I don't know.
having
Can you
Friday off?
No, I'm not confused about that. Okay.
Well, sometimes when July 4th is on, like over the weekend, right? Do you get? I think you usually either get the day after. I can't remember.
Oh no, we get. I don't know what day we have off.
July 4th is
I
Monday.
just don't come
July
into
4th
work.
is Monday. So
I don't come into work when it's a holiday, and I just look at the calendar. I don't plan ahead. But no, I'm going to be gone next week.
That's
Carol,
right, you're
for
gone.
the holiday week. And what I'm saying is, I'm bummed to miss the jobs report, which is on Friday. And I'm saying it is surprising to have it sometimes during a holiday week.
Well, you know what you get though?
'Cause it's going to be a light week.
You get S&P CoreLogic on home prices. You get Conference Board consumer confidence, expectations, retail inventory. You get a lot of good stuff this week.
All right. All right, that's good. Doesn't make up for missing next week.
No, it doesn't.
I'll
All
be
right.
following along in spirit.
All right, let's get back to world and national news. Over to Nancy Lyons in D.C. Hey, Nance, take it away.
Thanks, Carol. The House committee investigating the insurrection at the Capitol January 6th was supposed to be taking a two-week break, but an unexpected hearing tomorrow has been announced, with the panel saying new evidence has come to light. Bloomberg's Washington correspondent Joe Matthews says little more is known about what prompted the change in plans.
They were planning for just working this week to prepare for the final two hearings, so we did not see this coming. And still, we really don't know why. They have not identified any witnesses who could be testifying, and they haven't told us what that evidence is.
Bloomberg's Washington correspondent Joe Matthews says the hearing will be held at 1 p.m. tomorrow, Wall Street time. Amtrak says it's dealing with the derailment of a Los Angeles to Chicago train following a collision with a dump truck at a public crossing in Mendon, Missouri. There are approximately 243 passengers on board, and there are early reports of injuries. The New York Times is reporting at least 3 fatalities. A former high school football coach fired for repeatedly praying at the 50-yard line after football games has won a victory in the U.S. Supreme Court. Justices ruled Joe Kennedy's free speech rights were violated, along with his free exercise of religion. The ruling was 6-3. Bloomberg Supreme Court reporter Greg Storr.
The court was deeply divided along what have become familiar ideological lines. Writing for the 3 liberals, Justice Sonia Sotomayor said the court had elevated one individual's religious interests over society's interest in keeping a separation between church and state.
Bloomberg's Greg Storr. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Masser, along with Tim Stenovic, live in our Interactive Brokers studio here at Bloomberg headquarters in New York City, and also on YouTube. Hey, here's an interesting story. We were talking about the hot housing market and just getting into some other data points in terms of what we're seeing. We're going to get a read on home prices. We'll get that tomorrow. So this story by Alex Tanzi Timms talks about U.S. cities that saw some of the biggest jumps in home prices during the pandemic now have the largest shares of price cuts. This is according to Zillow Group.
Yeah, I must say I have some personal experience with this.
Like what?
The Mountain West area is one of the areas where we're seeing prices starting to be cut. Salt Lake City, Utah, for example, is one area where we're seeing a softening of the housing market. The change between May 21 and May of 2022 down close to 8%. We're also seeing it in interesting areas, Carol, that have been so hot over the last couple of years. Specifically Texas, San Antonio, Texas, Austin, Texas, and then also Nashville, Tennessee.
Yeah.
Everyone wanted to move to those areas.
Yeah, that's a really good point. I have actually relatives who've lived in all of those cities. They've been moving around at different jobs. But recently sold a home in Austin and said it was a good time to sell. The prices were up so much. She had kids going off to college and just kind of downsizing and rethinking and tapping into what's been a really, really hot market. So among the 50 metros in Zillow's data, 32 had more than 10% of listings with a price decline. In 8 cities, the share has jumped by at least 5 percentage points over the past year. So, these are the things the Fed's going to be watching, right? All these different metrics to determine where prices are coming down, and all of this plays into those inflationary numbers.
But I do wonder, Carol, these are still really expensive areas, and the housing prices have gone up so much. So a little bit of a pullback of, and I use a little bit in quotes because, normally an 8% pullback would be something, but in the what we've seen over the last 2 years and the way that these prices have gone up, that's not that much.
Yeah, no, that's a fair price, right? You got to take a long-term perspective. But if we're looking to see whether or not maybe we might be peaking, perhaps
Good point.
This is an early sign. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelleton. Nike revenue beat, shares up by about 2.5% after hours. Fourth quarter revenue coming in at $12.23 billion. Estimates on Nike, $12.13 billion. Another major headline, Nike's board has authorized a new $18 billion share buyback program. Fourth quarter gross margin, though, a miss. 45%. Estimates were for 46.7%. So again, recapping, Nike's fourth quarter revenue coming in better than expected. Headline breaking on the Bloomberg right now, $12.23 billion. Estimates on Nike, $12.13 billion. Cannot ignore that new $18 billion share buyback program out of Nike. Turned out to be a down day after last week's powerful rally. Investors rebalancing their portfolios in the final days of the quarter. S&P down 11, drop now of 0.3%. The Dow today down 62, a decline of 0.2%. NASDAQ down 83, a drop there of 0.7%. 10-year yield 3.20%. Spot gold down 0.2%, $18.22 the ounce. West Texas Intermediate crude up 2% today, $109.80 a barrel. So again, recapping and repeating, a Nike revenue beat after the bell. I'm Charlie Pellet. That is a Bloomberg Business Flash.
That is a massive buyback. Again, Nike board authorizing a new $18 billion buyback program. All right, so this past weekend, Tim, we saw pride marches around the country. We saw marches for women's rights following Friday's abortion ruling. We also honored Juneteenth just 1 week ago today. We're thinking a lot about issues of equality and all of its configurations and gaps, and so too is Colorful Capital, which was launched earlier this month. It's got a mission of delivering capital and support to what they describe are undervalued business leaders in the LGBTQ plus community.
We're very pleased this afternoon to be joined by Bill Burkhart, Chief Executive Officer of TIP, the Investment Integration Project. Bill joining us on the phone from New York City. Bill, how are you?
Doing well. Pleasure to be here, guys.
Yeah, it's great to have you with us. Talk to us a little bit about what you're doing at Colorful Capital and how you're finding the talent of the LGBTQ plus community.
Yeah, sure. So Colorful Capital, we're launching a $20 million venture fund, really targeting investing in scalable, early-stage, venture-backable enterprises led by LGBTQ plus founders and leaders. And the whole kind of investment thesis is really around this idea that these kinds of founders that represent these different segments of the community are kind of routinely undervalued by the venture capital space for all sorts of reasons. So that's really what we're trying to say is like, look, there's these kinds of founders typically have less access to early stage capital. They face all sorts of discrimination when raising capital. And this kind of leads to this underfunding of viable businesses at both friends and family and seed stages. And that's essentially what Colorful Capital is meant to do, is we're meant to step in there.
So, Bill, how do you see it playing out? Because money is one thing, right? Crucial for anybody who's starting up a business, especially if they can't bootstrap it. But, I mean, it's also the network that, you know, I think about investors, whether it's in Silicon Valley or angel investors, bring along with them to help these companies, these startups, you know, become something.
Oh, yeah. So, I mean, and that's also part of what we've been thinking about, too, right? So it's this whole idea of saying when you have folks that are kind of routinely overlooked, so you're not just bringing capital to the table, but you're also kind of starting from this position, at least for Megan and I, where we are members of the community. And so we kind of already approach this from a unique position of trust. And so as part of that position of trust, it's also saying, yeah, we're going to come in with capital, but we also have a big roster of venture advisors that essentially will come ride shotgun with us to essentially provide a lot of the kind of sector expertise and all sorts of the scaffolding and support that's necessary to ultimately help enable success for these founders and their enterprises. So we're doing a lot of that work to say, like, we may be focused on seed and pre-seed, but there's also kind of the angel rounds,
Connection lost.
Subsequent rounds, and making sure that we're collaborating with others within the industry to make sure that people really see this as a kind of spectrum, as a value chain that they can slot into, and that we can be useful in all sorts of ways beyond just saying, hey, here's a check. We're going to also try to really invest significantly and really provide the kind of support that is otherwise kind of missing right now.
Hey, Bill, talk to us about the LPs here and where you're raising the money from. We understand where the money's going, but where are you getting it?
Yeah, ultimately, I mean, so like with any venture fund, I mean, it's going to be a combination of our kind of network where Megan and I essentially come from. I don't know to what extent impact investment is can be a bit of a provocative term right now, but we come from the impact investment and sustainable finance world. So a lot of the networks that we'll be leveraging to bring into this in terms of LPs, but also venture advisors and others are going to really come from that world. So it's going to be a combination of family offices, foundations, endowments, folks that essentially are looking at this with a very kind of impactful lens in some cases, but others that are saying, look, we see this untapped opportunity, so we want to really get aggressive here. And so really trying to leverage that entire world, but then go beyond it. So that will include other members of the LGBTQ plus community and well beyond.
Well, okay, so let's talk a little bit about, when you are having these conversations, raising funds, what are the conversations that you're having that say, okay, obviously these people want to support your mission at Colorful Capital, but at the same time, they want to see a return on their investment. So talk to us about the data that you have that says, okay, these types of investments are going to return outsized returns based on a benchmark.
Oh, absolutely, yeah. So this is part of the whole thing, right? Like, this has to look, taste and smell like a traditional VC. It's exactly what it is. So there's a lot of studies that have come out that essentially point to the fact that diverse teams lead to outsized returns, particularly in the context of VC. And so there's depending on which study you point to, it can lead to improved risk management, increased IRR. So there was this one study that talks about a 10% increase in diversity in VC yields a 1.5% increase in IRR. Others point to increased valuation. So this is, now mind you, this also speaks to the problem. There's not a lot of studies that point specifically to LGBTQ plus community, but you can use proxies, right? And so for one of them, they talk about for gender balanced teams, step-up valuations were 13% higher than teams with less than 10% women in leadership. So it's stuff like that where you can start to knit together this kind of tapestry that shows, look, this is a really promising thing. It will lead to outsized returns. And guess what? It's routinely overlooked and undervalued. So that's where we can kind of essentially help bring that to the fore.
Well, great to hear what you're up to. Bill Burkhardt, he is the CEO of TIIP, the Investment in Integration Project. He's also co-founder of Colorful Capital, joining us on the phone in New York City. Hey, I do want to mention, Tim, just Nike one more time, because it's up 1.6% in the after hours, off its highs, but nonetheless rallying. I'm still blown away by this new $18 billion buyback program.
That's serious money.
Yeah, it's huge. On the company, I mean, their fourth quarter EPS, that was a little light year over year. We did see that. Gross margin, though, was a little light. And China revenue was also a little light. But nonetheless, do a massive buyback. Investors send the stock higher.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, have you figured out when jobs is? The jobs data?
I know when the jobs data comes. It's a week from Friday.
Just making sure.
I was just sad that I'm going to miss it because I'm out the entire week next week.
Hey, feel free. You want to call in? That's fine. That'll be a no.
Maybe I will.
He cares, but he cares just so much.
You don't want to miss a data dump like that.
Listen, you can read in on it.
And there's a jobs report every month, I hear.
Listen, coming up, we're not going to talk jobs, but we are going to talk about a hot market, and we're talking about real estate and attracting financial firms down in Florida.
Yeah, we're looking forward to be joined by Natalie Wong in just a few minutes. She covers real estate here for Bloomberg News. First, though, Charlie Pellet, a lot of action in the after hours. Bring us up to speed.
Indeed, we love it like that. Here's what's going on. Let's start off with Nike. That is the big story after our shares right now. They're up by just about 0.9%. Nike reported results that topped analyst expectations, overcoming supply chain pressures that have persisted for many months. Nike's fourth quarter revenue, $12.23 billion. That got the red sticky headline. Estimates $12.13 billion, but Nike's board authorized a new $18 billion buyback program. So again, after hours, Nike shares are advancing up roughly 0.9%. It was a down Monday to kick off the new trading week. Stocks fell after last week's powerful rally, with investors rebalancing their portfolios in the final days of the quarter. The S&P down 11 today, down 0.3%. The Dow Jones Industrial Average down 0.2%, 6240, down by 62 points. Nasdaq down 83, drop of 0.7%. And this headline from the Bloomberg Professional Service involving Bank of America plans to boost its quarterly dividend to 22 cents a share. 10-year yield 3.20%. Spot gold down $4 the ounce to $18.22, down 0.2%. West Texas Intermediate crude oil today up 2%, 109.84 barrel of WTI. As for the inflation outlook, Aaron Kennan is Chief Executive Officer at Clear Harbor Asset Management, and he was our guest right here today on Bloomberg Business Week.
We are seeing some light at the end of the tunnel, and I know it may not be in vogue to suggest this, but inflation metrics such as, for example, copper down 24%, nickel off 50%. I was looking at shipping rates. They're down dramatically over the last couple of months. Aluminum's off 35%, iron ore, wheat, even oil's off double digits right now.
And again, recapping, Nike after hours up now by 0.6% after reporting revenue that beat estimates, also announcing that $18 billion share buyback program. S&P down 11, down 0.3. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. You're listening to Bloomberg Business Week, watching us on YouTube. Carol Master along with Tim Stanovic. So, Tim, this is another one of our most read on the Bloomberg. It's about how Wall Street South got its biggest win, courtesy of Citadel's Ken Griffin.
Yeah, Natalie Wong and Amanda L. Gordon writing the piece. Natalie Wong is U.S. commercial real estate reporter for Bloomberg News. Natalie joining us this afternoon on the phone from New York City. So we saw the news last week, Natalie, about Ken Griffin deciding to make the big move. How exactly did it go down?
Yes, I mean, this is huge news for the Miami market. Ken Griffin has been vocal. He hasn't been, secretive about the fact that he's been unhappy with the political leadership in Illinois and about the rising crime rates in Chicago, where his company has been based for more than 30 years. And he has been slowly expanding his real estate bets and expanding his operations across other cities like New York and Miami. But, this news about them moving their global headquarters for Citadel and Citadel Securities really was a huge news for the market and for the company. We've heard of a lot of other finance and tech firms expanding to South Florida, West Palm Beach, Miami for the past 2 years because of the pandemic, remote working, and companies opening smaller outposts here and there. But this is really one of the largest moves by a big finance firm to move its headquarters to the region.
Natalie, how much of this is just getting the heck out of Chicago versus, the attraction and lure of Wall Street South, if you will?
I think it's a mix of all of it for Ken Griffin, right? I mean, his company obviously has had a lot of stake in Chicago. They employ over 1,000 people in the area. And it's a big move, in terms of relocating out of there. The tax environment is obviously more friendly in Florida. But even, personally, Ken's really invested a lot personally in political donations, in giving to the University of Chicago and helping improve the city of Chicago over the past few decades, and now he's going to be moving more of those personal dollars to Florida, to Miami, where he will be relocating with his family.
So, Natalie, does this essentially say, look, there was no shortage of firms, or at least firms moving outposts to Miami over the last 2 years, but why is this one different, and why perhaps does Citadel say, come on, everyone, the water's fine down here?
It really is a new level of commitment. For a long time, Miami, South Florida has just been seen as a place for tourism. Obviously, you have the CEOs and people going there during the cooler months of winter where it's much nicer to be in Sunshine State, but not really, investing their business dollars in there, not really having their talent be there all of the time. And now you're having a lot more younger talent relocate to the region because there's just more opportunities and more firms looking to hire there. And with a company like Citadel bringing so much of its business and dollars to the region, you're definitely going to see a lot of other finance firms that have been exploring the region, dipping their toes into the market, think maybe we could further expand or even possibly relocate here. I was talking to some brokers and developers in the region who were saying, it's not just the finance and tech firms that are opening outposts in the region. You have the ancillary firms like the law firms, the communication firms, the accounting firms that all are looking for space in the market to be relocated near, their clients that are going to be opening up spaces there.
All right. So should we now say, because of this move by Ken Griffin of Citadel, the floodgates are kind of opening? Like, I do wonder, there's always like a pivotal moment in trends, and I wonder if this is it.
This seems like it is one of the pivotal moments, for sure. I mean, the region has been experiencing quite a boom over the past 2 years. We've written about it. I mean, New York companies relocating down there, New York developers that haven't really done any major projects in New York City for the past 2 years are rushing to work on office projects, rental projects in the region, just because, rents across the board are rising rapidly. But really, Citadel making its decision to relocate its headquarters, not an outpost, I think is a major pivotal moment for the region.
Pretty wild. Natalie Wong, thank you so much. U.S. commercial real estate reporter at Bloomberg News on the phone in New York City. We've just got a few seconds. We want to mention a few headlines crossing the Bloomberg terminal. This one, Bank of America planning to boost its quarterly dividend to 22 cents a share, Tim. So that just crossed.
We're also seeing Morgan Stanley to do a buyback of up to $20 billion of shares and also boost its dividend. Plus another one, FTX CEO Sam Bankman-Fried says no active talks with Robinhood. That one, according to Dow Jones. Lots of news in the after hours here, Carol.
All right, let's get back to world and national news. For that, Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. Details are pretty much a mystery at this point, but the House panel investigating last year's insurrection is called a surprise hearing for tomorrow, according to Bloomberg congressional reporter Billy House.
The January 6th Commission was supposed to take a break until July on their hearings, 5 held so far, but suddenly they've announced a Tuesday hearing that had not been anticipated. We don't know exactly what the focus will be, but they say it's new evidence, new witness testimony.
Bloomberg's Billy House reports the hearing will begin at 1 p.m. Wall Street time. Ukraine President Volodymyr Zelensky today addressed G7 leaders and described Russian attacks on a Kyiv apartment house and other targets around his country. It didn't take long after that for the Biden administration to say it's preparing to supply more air and anti-missile defenses.
National Security Advisor Jake Sullivan described the aid package as in the works.
What we're trying to do at this point is tailor our military assistance to the particular immediate needs of the Ukrainians on the battlefield, advanced medium and long-range air defense capabilities, along with ammunition for artillery and counter-battery radar systems.
Sullivan spoke as leaders of the group of 7 industrial nations discussed next steps for Ukraine, and the North Atlantic Treaty Organization increased the size of its high readiness force. In Washington, Irv Chapman, Bloomberg Radio.
A train carrying 243 passengers between Los Angeles and Chicago derailed in Missouri this afternoon after hitting a dump truck. Amtrak says some people on board were injured. The New York Times is reporting as many as 3 were killed. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Massar, Tim Stenovic. We are live here on Bloomberg Business Week on Bloomberg Radio. We are also on YouTube. And a story earlier today on the Bloomberg talks about the millions in California that are going to get up to $1,050 in inflation relief.
Yeah, California Governor Gavin Newsom announcing late last night that he had reached an agreement with legislators on a $17 billion inflation relief package. Here's what he tweeted. Quote, millions of Californians will be receiving up to $1,050 as part of a new middle-class tax rebate. That's more money in your pocket to help you fill your gas tank and put food on the table, he tweeted.
Yeah, this is interesting. This is, I don't know if that I've ever seen this before. Is this new?
Well, they have a budget surplus this year. And that's part of the what they were able to do as part of the budget surplus. That's my understanding.
Yeah, I think New Jersey also has a budget surplus, and I think they've been talking about maybe returning some money. For California, here's how it breaks down, at least according to Bloomberg Law. Individuals making as much as $75,000 a year or joint filers making up to $150,000 would get $350 each, plus $350 for one dependent for a maximum of $1,050. Those with income up to $125,000 to $250,000 filing jointly would get $250 each, plus another $250 for each dependent. So it's prorated, right? And I guess it maxes out, at $500,000 filing jointly or $250,000 if you're an individual.
So here's my question, Carol, is about supply and demand. And when you give people money, and what happens to demand for things?
They spend it, you mean?
Yeah, and what happens to inflation in an environment where supply is constrained?
That's true.
Do you see what I'm getting at here?
Yeah, well, I know. Does it fuel the right? Because this is part of what we've talked about, right? That all of the stimulus money that came out of the pandemic. The other thing, though, is, it's a one-time thing, right? And if you're paying more for things right now, it just might ease some of that burden. Because even though gas we're starting to see come down, right, none of this stuff's going to drop like a rock.
No, when we say come down, we're saying come down from $5 to $4.90 a gallon.
Still a lot. Yeah. So maybe this just eases the pain, at least temporarily, until hopefully things start to move downward in a much more quicker manner. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a number of developing stories, headlines from the Bloomberg Professional Service. FTX CEO Sam Bankman-Fried has said there are no active talks taking place with Robinhood. This according to Dow Jones, citing a statement from Bankman-Fried. Nike is reporting results that beat analyst expectations, overcoming supply chain pressures that have persisted for many months. Nike's board has also authorized a new $18 billion share buyback program. Morgan Stanley is increasing its quarterly stock dividend to 77.5 cents a share from 70 cents. It has also authorized a new multi-year common equity share repurchase program of up to $20 billion. Bank of America is boosting its quarterly dividend to 22 cents a share. J.P. Morgan Chase says it plans to maintain its dividend at $1 a share for the third quarter, quote, in light of higher future capital requirements. Stocks lower, the S&P down 11 today, down 0.3. The Dow dropped 62, down 0.2. NASDAQ down 83, a decline of 0.7. 10-year yield 3.20%. Spot gold down 0.2%. 18.23 the ounce. West Texas Intermediate crude up 2.1%. 109.87 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
A lot going on. All right, Charlie Pellet, thank you so much. So about 2 weeks ago, the Bloomberg noted that the U.S. cannabis market size expected to reach $40 billion by 2030 and expected to expand at a compound annual growth rate of nearly 15% over that time. That's a new report, Tim, that's out by Grandview Research. Growth driven, at least this report said, by increased legalization.
Okay, so with this increased legalization, how are people who are using cannabis using it? Well, Curaleaf just got some new data. They did this survey with the Harris poll, and it found that 91% of adults who are over the age of 21 who have ever consumed cannabis, they've actually done so for health and wellness purposes, Carol, as opposed to, well, you know, recreational, I would suppose.
All right, so let's get to our guest. With us is Stacia Woodcock. She is clinical cannabis pharmacist at Curaleaf, joining us via Zoom in New York City. So tell us a little bit more about how people are using it, because we do see growth, Stacia, in the industry. So tell us a bit more, though, about specifically where people are using it and for what reasons.
Yeah, you know, I think this survey really helped clear up a lot of the stigma surrounding cannabis. People think that it's for escapism, for, you know, fun recreational purposes. But what we're really seeing is that by and large, the people that are consuming cannabis are doing so for health and wellness. It's for stress, it's for anxiety, it's for sleep. And the bigger takeaway is that over half of these people are using cannabis instead of pharmaceuticals. And I think one thing the COVID-19 pandemic did was sort of shift people towards more natural, homeopathic sort of remedies, and cannabis falls into that for a lot of people.
How are they using it? Not what are they using it for? How are they using it? Are they eating edibles? Are they smoking it? Or are they using vaping
I mean, I think
products?
that's the most fascinating thing about it. People think cannabis, they think smoking. Smoking is actually bad for you, no matter what it is. So we see a lot of vaporization. And I think that's a good opportunity to remind people that we're talking about legal regulated products. So these are products that are sold through legal state markets. They're tested. They don't have pesticides. They don't have contaminants. There's nothing else in these vaporized products other than pure cannabis oil and the terpenes found within the plant. That's really important because illicit market products are not regulated that way. We're seeing a lot of contaminated products. So these regulated products are much safer for people to consume. But we're also seeing the pharmaceutical industry technology brought into cannabis. So if you think of a traditional cannabis edible that takes like an hour to kick in and can last for 8 hours, we can change that with nano formulation that makes cannabis easier to be absorbed by the body. So you can consume it in a beverage, in a gummy formation. It's going to work in like 15 minutes and only last for an hour or two. So people can really customize the products that they're using to the symptoms that they're looking for. If you want to sleep all night, you can use something that's going to last all night. If you just need something for anxiety or stress right now, we have products for that too. So the versatility of the products really determines sort of what you're using them for.
So tell me though, Stacia, who should be using it? Because when you say homeopathic, and I know there's been, a lot moving forward in terms of greater oversight of homeopathic remedies. But I mean, I want transparency. I want to know what I'm kind of getting into.
Yeah, absolutely. I think one of the things that we see a lot are people that are comfortable with the idea of cannabis for cancer, for multiple sclerosis, for Parkinson's disease, like these really severe disease states. And there's a lack of understanding that it actually can be utilized for things like arthritis, for menstrual cramps, for migraines, for stress, for anxiety. I mean, we have patients and consumers coming in all the time for much simpler symptoms. And even more importantly, not all cannabis causes euphoria. I think that's also a huge misunderstanding that if you use cannabis, you're going to be stoned. That's absolutely not the case. The products come in a lot of different formulations, doses, ratios. So we can really customize what you're getting and how it's going to affect you for your lifestyle.
But I guess what I wanted to go back to is remind me where we are in terms of FDA oversight of all of this.
There is no FDA oversight right now. It's all state by state regulated, but that's where that regulation comes into play. So the testing, the formulations, all of that is essentially pharmaceutical grade, even without FDA oversight.
Do we get to a point where there is that FDA oversight, or we get to a point where, I'm actually going to my primary care physician and she or he is recommending that I go to the pharmacy and pick up some cannabis, not going to,
A dispensary.
Exactly.
Yeah, I mean, that would require federal legalization. And that's something I think the industry is definitely moving toward because access is huge. Like right now, someone who is a patient in New York, say, they can't travel to a different state legally with their medicine. And that's a problem. So we need that accessibility to open up for people to be able to consume and have, whatever they're using it for, to be able to cross state lines, have consistent product. That's all something we're moving toward. But I think, removing the stigma and seeing what people are using it for is a huge step in that direction. There's a lot of fear and miseducation and misunderstanding around cannabis. And I think the more transparent we are about why people are using it really helps more people get on board with the idea that this really is something that people are utilizing. They're utilizing it safely, and it's really helping them.
Well, yeah, and I do wonder, like, I certainly have tapped into it on the cosmetic side, and I know we've had some guests on, whether it's balms and, lip things and so on and so forth.
That's more than just CBD, Carol? It's like actual cannabis, or is it CBD?
That's a good question. I think it's just CBD. So this is different.
Yeah,
obviously.
this is different. This is the actual. How would you explain the difference, Stacia? Because
so
I
it's
can't.
tricky. So CBD is a cannabinoid, which are the active ingredients found in cannabis. Hemp is cannabis. It's just a term that we use for cannabis that grows with very little THC in it, but it's still a cannabis plant, hemp. But we differentiate by calling it hemp CBD. That's what can be sold over the counter, and that has no FDA oversight or testing requirements or regulations at all. And so that's where that can be really tricky. I always say use hemp CBD with caution. The cannabis products in dispensaries come from cannabis that contains varying amounts of THC, and almost all of the states regulate it much more strictly than hemp CBD, which really has no oversight. There are a lot more rigorous testing requirements. And what we're seeing now, trending, I think a lot of people, they know about THC and CBD as the two main active ingredients, but there's over 100 different cannabinoids in the plant. So we call them the minor cannabinoids, THCV, CBG, CBN, and almost all of them are non-euphoric and can be used to support different sort of health and wellness needs. So we're seeing an even bigger trend shifting towards these minor cannabinoids. People can take almost like a supplement without euphoria, and they can just help keep their body in balance.
Well, this conversation reminds us that we're still learning a lot along the way. Dr. Stacia Woodcock, she's clinical cannabis pharmacist of Curaleaf, joining us via Zoom from New York City. I mean, Tim, we've been talking about it for years. We've seen it play out in the financial markets, but it does feel like it still has a ways to go. Regulators, if you're listening, federally. You got crypto, you got cannabis, we got a lot of things.
What happens first? I need cannabis before crypto.
Maybe. All right, guys, that's going to do it for this Monday. For Tim Stanovic and the whole Bloomberg Business Week team, good to be back. Have a safe evening. This is Bloomberg.